with Jonathan Rose.
Hey guys, it's Jonathan. How's everybody doing? Welcome to Master Than Trading Live. Today, I got two important topics. I want to talk about the Fed. The Fed came out yesterday. I'm going to break that down for us. I have a pretty strong opinion on what I think of the market going forward. Also, yesterday, we had over 150 likes, and I forgot to give a trade. So I am sorry. I owe each of you guys an apology, but I have a really good trade for you today. This trade today is the second biggest unusual options activity that I've seen throughout the entire year. Number one was NVIDIA, obviously. NVIDIA is probably like the top 50 of the most unusual trades this year. But today, there was a monster trade in a well-followed name. So I'm going to go over that as well for the trade of the day. So let's go over to the screen. I got the chat open for everybody again. Yesterday's video, I was all excited. We talked about how to manage money like a casino, called probabilistic thinking, but then I hopped off without sharing a trade. We always share a trade whenever we get over 150 likes. So I definitely have a trade for you guys today. Get those likes going and we'll have a trade for you guys tomorrow as well. Okay, the Fed's liquidity pivot. Why this matters now. And then today's trade, guys, I'm gonna do it on the last slide. It's a $40 million trade. $40 million in premium traded. I can't wait to show you that trade. Okay, I want to start here because the NASDAQ is so expensive. I don't know if it's expensive anymore, guys. It's just high. This is the NASDAQ going back 5 years. Tech stocks. Tech stocks are dominating. I don't think you should really be waiting for small caps to come. QQQ, it's the future, it's AI, it's all the innovative industries, and the QQQs are absolutely dominating. They're the strongest they've been relative to the S&P, the Dow, and the Russell. Tech stocks are absolutely leading the way. So when this line goes up, tech stocks are crushing everything. When it goes down, the rest of the market is catching up. We haven't gone down in a while. That line, it's the highest point it's been in for 5 years, guys. So QQQ is just unbelievably strong. Okay, so let's talk about the Fed. What happened? Fed cut rates by 25 bips. We know that, no big deal, right? But here is the bigger thing. They announced the end of quantitative tightening. Quantitative tightening effective December 1st, 2025. This is the big deal. Quantitative tightening is going to end December 1st. The Fed will reinvest all maturing treasuries and mortgage-backed securities, halting balance sheet runoff. What they are doing is they are adding liquidity to the system. For the first time since 2019, the Fed has stopped withdrawing liquidity from the system. It's all going to change, guys. Okay? Bullish, 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 bullish. I am extremely bullish right now. Okay? Ending QT isn't a headline tweak. It is a major underlined liquidity pivot. The runoff was removing this from the market in liquidity per month. That is no longer going to be removed. That's no longer going to be a drag on reserves, collateral, or funding. So also with lower policy rates, this loosens financial conditions across the curve. This is extremely bullish, guys. The end of quantitative tightening, QT, along with the lowering of interest rates. And yeah, Powell did say that we're not certain he's going to lower rates, but he's going to. So while not fully quantitative easing, which is the opposite, quantitative easing is what happened right after the pandemic. Quantitative easing is when the government just prints. Quantitative tightening is the opposite of that. Again, these make me bullish. But I have more. QT has been running for over 3 years, shrinking the balance sheet. by $1.4 trillion. This is the most significant liquidity inflection since the 2019 pause. While policy rates falling and quantitative tightening ending, liquidity contraction is now over. That is phenomenal for risk assets, like your AI holdings, like your quantum holdings, like your uranium holdings. Just improve funding, guys. It's just an improved flow of money, more liquidity, easier to trade, less regulation, bullish, 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 bullish. Pull up the overall market before we get into your trade. Powell did caution December rate cut is a far from foregone conclusion. This feels very political to me. These comments, they were very, very late. And he said, okay, guys, yeah, quantitative tightening is going to end. We're going to lower rates, but we're not promising we're going to lower rates. Even though the market's pricing in about 75% for lowering rates in December, Powell comes out after the conference and says, it's not on autopilot. It's not automatic. The market's not just going to go up. I think it's going to. They're watching data. Great. Markets will test how far this liquidity shift can run. Bottom line, the Fed flipped the liquidity switch, but the market's still driving the narrative. We are absolutely bullish this market. Now, let me get into your trade. Again, whenever we get over 150 likes, we always have a trade of the day. This morning I got up and we had 157 likes of yesterday's presentation. So here you go. This was the trade. This is the second biggest option trade that I've seen this year. AMD. Now what's crazy is if I pull up AMD is trading 256. When this trade was executed, AMD was trading 262. After this trade went through the market at 857, which is right here, the market got obliterated. The AMD market got absolutely obliterated. It dropped by a full 10 points. This is a gnarly trade, guys. When I say gnarly, I mean unprecedented almost. 25,000. It is out of the money by about $20. Now the problem is, usually in the advanced notice program, I don't share trades that are $17. It's a $1,700 trade to get in on a one lot. Usually we'll look for trades that are a lot cheaper. I got one more slide for you. This slide was I break the actual timestamp, 857. If this customer, whoever bet $40 million that AMD was going to go down, the market makers took the other side of the trade. The market makers realized, and I was a market maker, trust me, as soon as this trade went through, you know what the market makers did? The market makers, and trust me, I was a market maker, they said, oh shit, I'm stuck. I need to sell stock. Because if the customer with 40 million is selling stock, the market makers are buying, getting long. That's why the market goes down, because the market makers have to rush and sell stock to get short deltas so they don't have exposure in their options. I'm going to pull up an option chain of AMD, and I'm going to walk you through how we can play this and how we can get the cost down, because right now, I don't want to share a trade with you guys that costs $1,700 per one lot to get involved. So let's see how we can get that cost down for you guys. Everyone having fun while we're going through this? If you're having fun, make sure you give a thumbs up. Thumbs up is a great sign of how much fun we're having during Masters and Live morning shows. Okay. AMD. Am I frozen? Ooh, that's not good. I might be frozen. I don't think I'm frozen. One sec. I am bearish AMD. Why am I bearish? Because whoever did that $40 million trade, they know more than I do about AMD. Sorry, a little bit slow. I'm surprised we're not lagging considering how slow my connection is. Come on, Mr. AMD. You're making me look bad. Thank you. Okay. Okie dokie. Let's talk. So this order, AMD is in January. Probably just like me, they don't want to own options in December because December options melt like ice cream on a warm day. Okay, guys, here's what we can do. Here's what we can do. Dun, 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 dun. Here's what we can do. I'm going to try to write it out for you guys so it's crystal clear. Appreciate you guys hanging out with me while I'm being a little slow here. Let's see if we can do it this way. Okay, of course, now I have to find a pen. So here's what I like. So the 240s are about, I'm going to call them $18 just for easier math. So that's an $1,800 trade. It's an expensive trade, I get. So in order to get that cost down, if we do the 220s, that's 10. It would cost $8 for a $20 spread. So we're risking $8 to try to make $12. Fine, not really. While we tune into Master Than Trading Live, that's not sexy enough for us. I'm not trying to do a 50-50 bet of something that's out of the money like that. No thanks. All right, guys, I like the 230s actually. I like the 230s and 200s. So the 230 for $14. Okay, I'm writing on my mouse, so my apologies there, but so say those 230s are 14, and then the 200s, or even the 195s, here, the 195s are 5. That would cost $900 per trade. But the cool thing about $900 per trade, we could make $3,500. We could make $2,600 if we're right, and we're risking $900. Okay, so it's the 230, 195. Sorry about my penmanship. It's buying the 230s, selling the 195s. We can do that for about $9, a $900 trade. If AMD trades under 195, we can make $2,600 per one lot. And again, why are we doing this? Because this is one of the biggest trades that I have seen all year. If this doesn't make sense at all, guys, the video is going to be on YouTube. Just pause it, go over the video again. It's a downside put spread, buying the 230s, selling the 195s, buying 14, credit for 5, about $900 of risk. Okay? That's what I got for you. Make sure you give a thumbs up. Everybody in our all access, you guys hang tight. We'll be right back to go over some of our open positions. All right, guys, thanks so much. Hey guys, I'm going to do this video. It'll be for advanced notice because I want to go over the trade and the Discord community of the trade that I just shared with you guys. Okay? I am bullish the QQQs. I am bearish AMD.